Hey everyone, this is Bergman, founder and CEO of IRA Financial. Welcome to another episode of AdBits, where I will be sharing bits of knowledge about self-directed retirement. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everyone, and welcome to another episode of AdBits. I'm Adam Bergman, tax attorney and founder of IRA Financial. And on today's episode, I'm going to put my lawyer's hat on once again and talk about the difference between an LLC versus a partnership. I did a AdBits, I guess dropped it last week, on the difference between corporations and S-Corps, C&Ss, and I got a lot of great feedback. And I had a bunch of people say, hey, that's really cool. Never really fully understood the difference between those two entities. Really appreciate you doing that. I know the channel usually focuses on self-directed retirement topics, but this was really helpful. And can you do more of these types of videos? I said, sure. I actually have done so many of these blogs and articles that in the past. So I was like, yeah, let me go back. Let me do some review of what I have and let's do it. So today's episode is the difference between LLCs and partnerships. So LLCs are definitely way more widely known and used today than they were 20 years ago when I started practicing law. And most people now, in fact, I read somewhere that almost close to 95% of new businesses being set up are LLC. So it's obviously now become the most popular business legal form. And it has a lot of similarity as a partnership, right? They're both, from a tax standpoint, pass-through entities, right? And I use this analogy when I talked about the difference between a C and an S Corp. Think of the C Corp as a big box, and it just boxes in all the income. And a C Corp, as a recap, has two layers of tax. There's the corporate level, which is currently a 21% federal tax rate. And then there's dividends of retained earnings. So when the corporation pays its tax, all the retained earnings in the company, net of the taxes, can either be used for the business as working capital, or it can be sent back to the shareholders by way of a form of a dividend, which is then subject to tax, generally 0 to 20% tax. Okay, and that's known as two layers of tax. You have an entity level tax and a shareholder level. An LLC or an S Corp is one layer, just the shareholder level or member level or partner level, I should say. No entity level tax, no federal income taxation on the net income passing through a LLC or a general or limited partnership. So that's a main difference between a flow-through entity like an LLC or partnership and a corporation. Okay, so the tax implications are very significant when you consider the differences between a corp and an LLC or partnership. So from a tax standpoint, there are a lot of similarities between LLCs and partnerships. So an LLC basically combines the limited liability protection of a corp and the taxation flow through synergies of a partnership. So an LLC, limited liability company, is very similar to a corporation in terms of they're both offering limited liability protection, right? So LLC, like a corporation, gives you limited liability protection, meaning that if you have $100 in your LLC and a creditor comes after you, all they can get is $100. They can't get your house, your cat, your dog, your Ferrari, your Ford, whatever is outside of that LLC, they can't touch in most cases. Okay? That is deemed, and that is what is known as limited liability protection, the same with a corporation. Okay, and that's why LLCs are super popular, and we'll get to see why in terms of partnerships. There's generally no limited liability protection when you look at a general partnership. Okay, so that's a very, very big distinction between an LLC that has limited liability protection and a partnership that does not have limited liability protection. An LLC can have more than one owner, also known as members, and each member generally has a percentage of ownership, known as membership equity or units. Generally, so if it's two people start a LLC, it could be they each put in $50. It could be 50-50, or one puts in 80, the other puts in 20. It can go 80-20. You could have situations where one member puts in nothing and then gets what's known as a profits interest, gets a percentage of the profits. And I'll do probably another podcast on that, because there are some tax implications potentially of not structuring a profits interest properly, where the liquidation provision goes based off positive capital accounts, because if not, there could be deemed a taxable event when receiving the profits interest. But if you draft the operating agreement properly and generally you liquidate based off positive capital accounts, meaning whatever member puts in money gets their money back before the other profits interest member gets any cash, generally the profits interest will not be a taxable event. Members could manage the LLC themselves, or you can have a manager that's not a owner. And we know in the self-directed IRA LLC context, the owner of the LLC is the IRA, and the manager generally is a third party, could be the IRA owner or some other person. So members do not have to be managers. What's a partnership? So we'll talk about general and limited partnerships. Partnership is a business relationship between two or more people. Basically, you don't even need a partnership agreement. Actually, you don't even need an operating agreement, an LLC operating agreement. No states will actually punish you if you don't have one. You don't have to publish the operating agreement with any state or even provide a copy to any state. It's there for your protection to make sure that the rules and procedures for the LLC are set forth and agreed upon by the members. Now, partnership would have a similar type of agreement known as a partnership agreement. And if it's a regular old partnership, then the partnership is generally managed by the partners. And there's no limited liability protection. So the partners are liable for the debts and obligations of the partnership. Okay. So generally you can have a managing partner that manages the partnership, and you'd have an agreement, partnership agreement, that would set forth all the terms of that. So you can set up LLCs and partnerships online. Each state has their own. Nowadays in 2021, they each have their own formation process online. Some still require paper submission, but most are online. And not super difficult, of course. And again, it's all state specific. However, in the case of a partnership, if two people set forth and come up with a arrangement, whether it's a joint venture or some type of business relationship, even if you don't formally file to do business as a partnership in a state or even have a partnership agreement, you still may be deemed a partnership, and actually you still may be deemed to file and required to file Form 1065. So that's something that you should think about if you have some type of partnership arrangement. Even if it's loose with a friend, it could be deemed a partnership for federal income tax purposes. It's not so much of an issue from a tax standpoint. Remember, partnerships are flow-throughs, but from a filing standpoint, Form 1065, it could be an issue. Single member LLCs do not file a federal tax return. A multiple member LLC needs to file a 1065. Multiple member means two or more members. Okay. So again, major differences here. Corporation, 2 layers of tax. LLC, 1 layer of tax with limited liability protection. Partnership, 1 layer of tax, but in most cases, no limited liability protection. Okay. So in a general partnership, each partner again is personally liable for the debts of the partnership, because each partner actively participates in managing the business. So each partner has personal liability for the actions of all the partners, which is one reason why the LLC is so much more popular than the general, a regular old partnership. It's very rare to see just a regular old partnership. Law firms, some medical practices are required to do so depending on the state. But you don't see private equity, hedge funds, venture capital funds, even small businesses set up partnerships anymore. It just doesn't happen. Now, limited partnerships. You do still see limited partnerships. Don't really need to use a limited partnership. An LLC will serve the same purposes as a limited partnership. Who still uses limited partnerships, and what are they? So private equity, hedge funds, venture capital firms still use limited partnership. And basically a limited partnership is a type of business that's owned by 2 types of partners. A general partner that does the management and has no limited liability protection, and limited partners, which are basically just investors. Okay. General partners own and operate the business. So in a hedge fund setting, private equity, venture capital setting, the general partner will get management fees, and it will generally try to get a carried interest of maybe 20% of the profits above a certain threshold, potentially. And it would operate the business. Okay. And that's why it would receive fees. Some general partners set up an LLC to run their general partnership. So this way they are protecting themselves and availing themselves of the limited liability protection rules. So in a typical hedge fund, private equity venture capital setting, you're going to have a GP that's an LLC, or could be technically, generally an LLC, and it's owned by the partners, members, and then the LLC will obviously provide them limited liability protection. The LLC will provide the general partner services, will receive management fees and the carried interest. So that's how the GP gets around not having limited liability protection. And as I mentioned, LPs, limited partnerships, professionals use them, medical, legal, and obviously investment funds do as well. Family businesses also, in some cases, use them as well. In the general partner, you have a limited partnership, you have the general partner, and you have the limited partners. The general partner is generally responsible, as I mentioned, day to day. Limited partners, not so much. And of course, the general partner could be an individual or entity, but it's generally entities, because if you don't use an entity, you're going to have no limited liability protection. They're pass-through entities, limited partnerships, just like LLCs, even S Corps, so they have the same tax treatment. The only issue is not all partners are availed of limited liability protection, because the general partner is not provided that, although the general partner can just set up an entity to provide them with the limited liability protection. LPs have pretty much the same advantages of partnerships and LLCs. It's flow through. It's a big tax benefit, and obviously the major disadvantage is the general partner bears all legal liability, but they could limit their liability by setting up an entity. Limited partners generally do not have responsibility or legal liability because they're limited in nature, and they're not involved in the day-to-day operations of the business. So all in all, to recap, take a step back, summarize what's going on here. C Corp, big box, 2 layers of tax, 21%, and also the shareholder tax on the dividends. S Corp, like a partnership, 1 layer of tax. The only difference is S Corps have limited, 1 class of shares, common, limited shareholders of 100, no foreign ownership, and not as flexible as an LLC. But from a tax standpoint, pretty much treated the same. And obviously you have the advantage of not paying FICA Social Security tax on your W-2. An LLC, state formed, no entity level tax. You have pass-through taxation benefits. The owners, the members, pay tax on the allocated income. You also have limited liability protection, which is super important, and why the LLC is the most popular form of business today. A general partner, when 2 or more individuals or entities get together to hold real estate or enter into some type of business arrangement, you generally will form a partnership with the state, but you actually still may technically have a partnership even if you've not formed it with the state, and you need to then consider if you have to file a 1065. There is generally no limited liability protection from a general partnership standpoint, but you do have flow-through tax treatment. Limited partnerships, which are more common than a general partnership, the limited partners have limited liability. The GP does not, although the GP could just set up an entity providing them with limited liability protection. The GP runs the business, gets management fees and potentially a carry, and the limited partners just get a share of the profits. And that's really the difference. Again, I still see hedge funds, private equity, venture capital funds, even real estate funds do the LP model. There's no reason for it. They're just used to it. There's zero reason to use the LP over an LLC. You can do different classes with an LLC, A, B's, and C's, and so on and so forth. You can have the manager get appointed as an entity and get the management fees. So there's no need for the GP. Some people just like to do it. They've been using the same documents for years, and they're just comfortable with the partnership, the LP documents, but the LLC will serve the same purpose. So not really sure why you still see a lot of LP formation in an investment fund world, but it's still there. If you're listening and you're just starting a business, you'll probably want to go between the LLC and the S Corp. After the Jobs Act of 2017, I even set up some corporations because the corporate tax is 21%. I didn't necessarily need the income to flow through to me. If I had a higher tax rate than 21%, I wouldn't necessarily want to pay that tax. So there were some benefits of having C Corps. If the Biden administration increases the C Corp tax from 21 to 25 or 28%, you may see people just doing an S election on that C to get flow through tax treatment and get maybe some of those losses. And depending on where their income tax bracket is, it may not be as significant higher as the corporate tax rate. So some tax planning will go into making certain business decisions down the road. I'm against this. I think there should be tax neutrality. I don't think you should be making business decisions for tax purposes. I think you should be making business decisions for business purposes. So I wish they kind of got rid of all this and just made everything kind of a one level of tax, even on the C Corp level. It just, people shouldn't be setting up different entities to get different benefits. That's just the way it is. I also will probably do another podcast on guaranteed payments. So how do you get paid out of a partnership or LLC? There's a lot of debate. Do you do a W-2 to the members? Do you just treat it as a guaranteed payment, which is kind of the same thing, still subject to Social Security and FICA. Some accountants are very, very specific that no partner should get a W-2. It's kind of the rule, but many accountants say, well, it's the same thing as a guaranteed payment and it's more practical, so we're going to issue W-2s. So there's some debate on that. I wouldn't worry about it to an enormous extent because your accountant or CPA will deal with it, but these are some of the things that I probably will start doing more podcasts on. I've gotten a lot of feedback that, hey, let's broaden this a little bit. There's a lot of people that have self-directed IRAs. They're also business owners, entrepreneurs. They have a solo K, and corporate entity formation, corporate entity taxation is something that they're interested in. For example, I had someone ask me, love for you to do a podcast. How do you sell an LLC? Tax implications, also on a carried interest. How do you structure an arrangement to take advantage of a carried interest, either in or outside of Roth? So there's a lot of different stuff I can do, and I think AdBits is a pretty good forum for it. So I'm going to do it. It's also easier kind of to just talk in podcast form versus just a video. It's more casual for me, less pressure, so it's a little bit more fun. So I'll probably continue through the AdBits platform. But if you're listening for the first time, thanks. Definitely subscribe because there's going to be a lot of really good content in the pipeline, and I'm working on it. So thanks again. Hopefully you now understand the difference between an LLC and a partnership, and then I kind of threw in the limited partnership as well. If you want to go back and check out the difference, learn more about the difference between a C and an S Corp, check out the previous AdBits, and I think you'll learn a lot about that. And that's it. It's fun being a lawyer again, and I hope you guys enjoyed it. Try to keep it as simple as possible. If you are debating between an LLC and a partnership or LP, go LLC. There's not a lot of reasons to do the general partnership or the limited partnership. The big decisions between the LLC and the S Corp, which maybe I'll do that as my next AdBit. That's probably a good topic. I think that will be my next topic, LLC versus S Corp, and then we'll kind of debate that. That's it. I hope you guys have a great week. Thanks for listening, watching if you are on YouTube, and talk to everyone again next week. Take care.